Hello everyone, welcome to Property Zone Live again. Today marks the first day of our MCO 3.0. Okay, at least for the 6th district in Selangor. Okay, so for those of you watching this, I hope everyone is staying safe, staying healthy at home. All right. So today's topic for Property Zone Live will be the market updates that you might or might not have missed. So what I'm going to do is share with you some of the things happening around the world that is impacting whether economics, financial markets, or just normal daily life for you and I. Okay, I'm just going to pull out the screen and hope everyone can see it clear. Okay. Just 1 second. Okay, got it. Now, this is the headline for today, the market update for May, first week of May that you don't want to miss. Okay, I'm just going to go through a summary of the points and the updates I'm going to share with you in these few points. Okay, the first one, we all know that the government has been printing money all over the world at the fastest pace we ever seen. But this has been felt in one of the McDonald's interview in Florida. I'll get to it. You're seeing the slide now. Second thing is also the building material prices has been going up to the roof. All right, what does it mean to the economy? What does it mean to the property market as a whole? Now, the third one is there's an acute labor shortage to be seen in Malaysia and all around the world. But the most reason why we see is at the oil palm estate. The fourth, I'm going to give to you fresh out from the oven, the property guru give us the Malaysian property market index based on year-on-year basis. Now the last one, I'm going to give you share with you some update by this website. This is research website called Numbeo. All right, N-U-N-B-E-O. Basically, they want to compare among cities, or also between cities and one city compared to the regions. How do they fare in terms of average income, in terms of living expenses, but most important, the living quality of all. All right. So now I'm just going to jump straight to the first point. As you know, we have seen in many downtime, in many crises, people were put out of job. So when there's a job opening, a lot of people are queuing up just to get an interview. All right, this is what we would expect to see when a crisis, especially a crisis like COVID-19, magnitude like this. But strangely, what you will see in the news past few days is that there is an owner of a franchise, McDonald's franchise, they're having a problem hiring. It means that when there's a job opening, they want to hire workers, basically to serve burgers. They have a hard time. So eventually they come up with an idea in order to encourage more people to come for interview. I mean, to come for interview, not necessarily there will be a match between the candidate and the job, just to come for the interview. This candidate will get $50. Now, when I say $50, it's of course a different context to 50 ringgit in Malaysia. I'm not talking about currency value, all right? Of course, it's 1 to 4. But I'm also talking about the purchasing power of $50. The $50 can buy almost 2 times to 3 times the thing that we can get in Malaysia using 50 ringgit. So the purchasing power of $50 is a lot more. In other words, the attraction power is a lot more. By showing up for a job opening in the McDonald's in Florida, you straight away get the $50. But the problem is there are less people turn up as expected. So with this, they are considering to increase the minimum wage from $12 US to 13 US dollar, which is way above the minimum wage in Florida. Now, I want to bring you to this phenomenon is they actually did a study and try to understand why. Why in a crisis time like this, you could just get $50 by showing up the job, but less people are turning up. The first thing that come across is, of course, the unemployment benefit. It means that if you decide to stay home without getting a job, you can continue to claim what we call unemployment benefit from the government. So this is actually kind of discourage people to get an actual job. Of course, that's first thing. The second thing is the helicopter money, the financial assistance rendered by the government to individual or to the household. They have more money in their pocket. Therefore, the tendency to work is lesser. All right, so financial assistance. This one is ad hoc. That is, of course, from the stimulus check. Third would be people are still afraid of COVID-19, whereby the frontliner, they will be including flipping the burgers, get in touch with the customer. They're probably still worried about the risk of contracting the virus. But I find the third points not so relevant. So towards the research, towards the survey, I think most people are still believe towards the point that people are having more money in the pockets. They are not willing just to show up for the job interview. All right. Now, the second point of it is this news was actually first published in January when we have our MCO 2.0. All right. After the MCO, a lot of builders, a lot of main contractor, a lot of subcontractors are complaining that the building material cost has shot up the roof. You see, the news published in January, they're already complaining the building material cost has increased tremendously. Fast forward 3.5 months now. All right, the building material cost not only it didn't come down, it shot up further. Few of the things that is noticeable would be the steel. All right, the steel per ton, if I have remember correctly, that published in the articles, has gone up from 2,000 per ton to 3,000 over per tons. I'm talking about 30% increment. Coppers, lumbers has gone up by the tune of 100 to 300%. So this creates tremendous pressure on property market, on the building material, and people who are involved in the industry. As some of you may be aware, the practice of Malaysia is that there is no variant prices clause in subcontractor. It means that if I'm a subcontractor, I've decided to take a job from the main contractor, right? Any increase of the price is for the subcontractor to bear. So in this case, it will create two most likely scenarios. The first scenario would be the subcontractor will say, you know what, I'll be losing money in this project and I just can't continue, right? I will follow up, please look for another people to continue. The second scenario will be the contractor tell the main con, right? I have no choice. I still have some cash flow, even though this job, I'm doing it at cost. I'm probably doing it at a loss. I will still continue to do it, hoping that when the market recover, all right, when we get out of the COVID-19, when you as a main contractor give me more job, I can continue to sustain, I continue to survive in this industry. But in returns, I will most likely to quote a higher price, not just because of the increase in building material cost, but also they need to cover my losses for the previous job I've done for you. So let's take a look, probably monitor what it's going to be 6 months, 1 year down the road. Okay. Skyrocketing property prices see seller raise the price expectation. I think that was some of the effect that's channeled down from building material immediate to not only the new launches but also to the secondary market. One thing I share with you is that my mother has always wanted to sell a house completed. All right, 2 years completion, there was no taker, and last year was extremely quiet because of we are in the midst, the height of COVID-19, MCO, and so on, and all these things. But end of the year, when the things seems to recover, all right, there will inquiries start coming in. So finally, there's one buyer, look at the property and sign a deal, sign an SPA with mother. Subsequently, there are more than 2-3 agents keep calling because my mother put me as a contact point. Inquiries just keep on coming in, and the buyers and the agents, even though they know that have signed the booking form, they take the deposit, they even follow up with the progress, whether the purchaser A managed to get the loan or not. If not, they have another purchaser getting ready to buy the property. So for me, it may be an isolated phenomenon, but at the same time, it could be a benchmark. It could be one of the indications. Is like people are expecting the property prices to go up. Of course, at the background, we have quantitative easing measurement. No, we have low interest rate. We have government printing the money, but at the same time, they are foreseeing the escalation prices in building material will transfer to future increment of the property prices. No, not only to new launch, but also to the secondary market. Now, the third I want to share with you is that if you have been following the price of CPO, crude palm oil, actually we have been enjoying a steep price appreciation, which is good for Malaysia as a whole because we were one of the biggest exporter, but it will be good for the small estate owner as well, small estate holders. But truth to be told, okay, when the price has gone up more, what the small estate holder, the small holder are actually getting less in return. How is it possible? So when I first read it, it kind of like contradictory. All right, you're selling something when the price of something has gone up tremendously, but your revenue comes down. How could that be? The only reason that can explain that phenomenon is that you are not harvesting as before, as much as before. And truth to be told, this is the exact scenario. And what contributed to the drop in the harvesting is the acute, you can see the highlighted point, is a labor shortage is very acute now. All right. So the smallholders are not enjoying the CPO prices now, and it's really a waste. Now, if you just zoom into the oil palm estate, we know there's a shortage of labor, especially because the challenge to getting foreign workers coming in when the logistic, when the workers hiring, and also the testing, everything is in place now. Okay, this I think is not just happening in oil palm. I think you're talking about manufacturing plant, you're talking about construction sector. This is actually the same thing. The labor cost, not only you're hard to find labor, even you can find the labor, the cost has increased tremendously. We are talking about at least 30% increment for the labor cost. Okay, the short-term labor, all right, has increased from 70 ringgit a day, has gone up to above 90 ringgit per day. They are talking about 30% increase just on the daily construction workers, contractor workers. Now, Malaysian property market index fresh out from oven by Property Guru. This will be indicating the Q2, released on the Q2 2021. All right, we are on May, the second month of quarter number 2. How did we fare? Malaysia property prices, right? Now compared to 1 year ago, we do suffer a drop, but the drop is quite marginal because it's 1.79% based on year-on-year basis. Of course, we're talking about Malaysia as a whole. The individual area might be different. Okay. The second thing is, how do we fare in terms of the supply? It's surprisingly, at first, you may think, oh, how come the supply has come up so much? Okay, I think one thing to explain this phenomenon is the supply of the housing has increased almost 16% based on year-on-year basis. The main reason is because last year, in the midst of COVID-19 and MCO, all right, a lot of launches has been holded. So when you compare to something that is very low, all right, a recovery from today will translate into a higher spike in the percentage. Okay. Now the next one is a number by Numbeo to indicate how we fare if you stay in KL, the capital of Malaysia, compares to anybody who stay in capital of other Asian countries, namely Vietnam, Thailand, Philippines, Indonesia, or even Myanmar. Okay? To summarize it, all right, a lot of people may find that traffic in Malaysia not so good, security not so good, no pay quite low, house is expensive, living expenses expensive. But based on the data, what it has shown us here, this is Numbeo database, okay? This one is out on just almost 1 week ago, all right? KL ranked the second highest in terms of monthly average net salary. When I say net, it means not the gross, we minus all the necessary thing, all right? We are only behind Singapore, although it's quite far away. We are earning less than half of Singaporeans earning in terms of ringgit. But the quality of life in KL is actually a lot better compared to Southeast Asian countries, the one I mentioned to you, namely because even though we earn the second highest in KL on average, the living expenses is the lowest among all. We are the lowest even compared to the cost of living in Manila. All right, so you can see the Manila living expenses is more than KL by 33%. All right, and then Vietnam you have 28%, Jakarta you have 24%. So that will put Malaysia or KL in specific in the road map or in the world map in a much better living quality. All right, so this is some of the snapshot of the things happening around the financial market around the world, and I'm going to share with you in Property Zone tonight. So again, I'm Shawnee here. Look forward to see you next round. Everyone, stay safe. Stay safe in this MCO 3.0. Bye-bye.